Good evening, Professor. Today I will be discussing the week 4 assignment 1, what I learned about financial analysis and an example of how I can apply it to my life, and things like that. So to start, what is financial analysis? So financial analysis is the process of evaluating a business, their projects, their budgets, and other financial related transactions to determine their performance and suitability, productivity, things like that. The main types of financial analysis is the internal and the external. So internal, you can have employees, owners. Those are the kind of guys that are, associated with internal, obviously. And then your external can be lenders, investors, labor unions, things of such. So to get a little bit more into depth about it, the internal financial analysis is usually conducted by a person who has access to the internal accounting records. And so usually what you do with an internal analysis is you can analyze your employees. You can prepare for financial projections in the future, things like that. It just gives you a better overall understanding of where your company stands and where it can be taken, because you know where your finances stand. So it could literally just look at your overall performance. That's kind of like also what I learned and what I can use in my professional career is that, I can learn the efficiency of my employees and things of such, and learn how to, compare my business to another's, and kind of like dissect, take a bit from theirs and a bit from mine and create the most efficient way to do that. And you can do that through internal. So that's kind of the thing that I wanted to touch on what I really learned and what I could really apply. But anyways, moving on, looking at external. External is done by outsiders, so they don't really have its exact detail. So there is that difference there. They don't really have like I said, the details and the access to it. So it's kind of hard for them to get a great depiction. Kind of hard for them to get an overall understanding exactly, kind of precisely. And we've seen that through all of our financial statements. There's always going to be a give and take. And so these guys would be included, would be bankers, they'd be suppliers, they'd be investors, things of that. Professional analytics, analysis people, and things like that. So the benefits of an external would be it can help investors choose the best possible investment, even though it is kind of like it's not a rough draft, but like it's not going to be the exact number. You have more detail if you have an internal analysis. And then the benefit of an internal would be that they can make future business decisions based off past trends and successes. So looking back on your past financial analysis as a manager can help you to make better decisions in the future. Just, plain and simple like that. And that's pretty much everything that I learned within the, financial analysis. I think that there were plenty of takeaways through that. But these are the most important things that I saw and the things that I learned, and the things that stuck with me. So thank you and have a great day.